Welcome back to Investing Talk Podcast. Today, we're taking a closer look at a company that's truly been on, well, quite a remarkable journey, experiencing some pretty dramatic and frankly interesting financial shifts. We're talking about Cemtrex, an advanced security technology and industrial services company. Our mission today is to really unpack Cemtrex's recent performance, dig into the financial metrics that are telling their story, weigh their emerging strengths against some persistent potential red flags, and discuss their future outlook, especially concerning their acquisition strategy. You might be hearing some chatter about this one. We're here to give you the full, nuanced picture. Before we jump into the details, if you find this kind of in-depth analysis valuable and you want to stay informed, please take just a moment to subscribe, like, and leave a comment. Your engagement truly helps us reach more learners like you. And if you'd like to support us further, maybe consider buying us a coffee. The link's usually in the description. So let's open the books on Cemtrex. For a while, their financial results were, to put it mildly, a bit of a mixed bag.
But recently, management has declared they've hit what they call an inflection point. From your perspective, what exactly does that mean for Cemtrex, and how significant is this supposed turnaround?
Well, what's truly compelling here is just the sheer scale of the shift we've seen. Really dramatic. In Q2 of fiscal year 2025, Cemtrex reported a staggering 59% year-over-year surge in revenue, reaching $27.3 million. But maybe even more critically, they completely flipped their bottom line. They swung from a net loss in the prior year to a significant profit of $8.4 million. This isn't just a small improvement, it's a major reorientation of their financial health, from red ink to solid black.
It's an undeniable swing in performance, a huge swing. And beyond just the net profit, their operating income also made a remarkable leap, didn't it? Turning a $1 million loss into a $4.6 million profit.
That's right.
Plus, their gross profit margin improved 5 full percentage points, from 40% to 45%. So for a company of Cemtrex's scale, what does this significant improvement in margins tell us about their operations?
Yeah, this brings up a really crucial point about operational discipline and efficiency. When you see gross margins improve like that, it signals a few things. Firstly, they're likely either managing their direct costs, the cost of goods sold, much more effectively, or perhaps they're shifting their sales mix towards higher margin products or services. Or maybe both. Either way, it suggests a more, let's say, disciplined approach to their business, which is absolutely critical for sustained profitability, especially after a period of losses. It shows they're not just growing revenue, but they're actually doing it more profitably now.
Okay, these numbers are certainly attention-grabbing. But to truly understand this turnaround, we need to peel back the layers a bit. What exactly is Cemtrex, and what are the core businesses driving these, newly impressive results?
Right. Cemtrex primarily operates through two distinct, though kind of complementary segments. First, there's their security technology division. This is most notably driven by Vicon Industries.
Vicon, okay.
Yeah, this segment is focused on developing and deploying AI-enhanced security solutions. So think advanced video surveillance systems, access control, that kind of thing. They largely cater to government agencies and large enterprise clients. So sophisticated security for, say, critical infrastructure or big corporate campuses. The second pillar is their advanced industrial services. Now, this segment is less about technology products themselves and more about comprehensive service delivery. They handle the full lifecycle of industrial projects, installation, ongoing maintenance, complex project management for industrial facilities. This could be anything from upgrading of factory systems to managing large-scale infrastructure projects, the hands-on work.
It sounds like a pretty diverse portfolio, and that security technology side with AI, that's certainly a hot area right now, isn't it?
It is.
Were there any specific events or major contract wins that really fueled this recent growth spurt?
Absolutely. A significant driver seems to have been a series of substantial government contract wins, particularly within their security technology segment. These are often large-scale, high-value projects that can provide a really significant revenue boost in a given quarter or year. And just as an example, on the industrial services side, their subsidiary recently secured a $1.84 million contract from the city of Lancaster for wastewater treatment plant upgrades.
Okay.
This project, it's slated for completion by mid-2026, and it really highlights the ongoing demand for critical infrastructure upgrades across the board. That feeds directly into their industrial services expertise.
So if I'm understanding correctly, it's a combination of steady government spending, particularly for infrastructure, and a strong focus on, cutting-edge AI-enhanced security tech. Those are acting as significant tailwinds for their business right now.
Precisely. They seem to have positioned themselves well to benefit from these larger trends.
Okay. Those income statement numbers, They paint a very rosy picture of recovery. But as any seasoned investor knows, the income statement only tells part of the story, right?
Right.
To truly assess their financial health and, importantly, the sustainability, we need to turn to the balance sheet. Does Cemtrex have the underlying financial muscle to sustain this newfound profitability and fund its future ambitions?
That's the key question. And while the income statement certainly shows a strong turnaround, it's always prudent to look at the balance sheet as well. Very important. So at the end of the quarter, Cemtrex's cash position stood at approximately $4.5 million.
$4.5 million cash.
Yep. And their stockholders' equity, which is essentially the company's net worth from an accounting perspective, improved to $6.4 million. Their inventory also saw a slight decrease, which, can be a positive sign. It might indicate efficient operations or strong sales clearing out stock.
Okay, so we're seeing some positive movement there on the balance sheet too. What about a metric like return on equity, ROE? That can tell us a lot about how efficiently a company is generating profit from the money shareholders have invested. How does Cemtrex's ROE look, especially in light of this inflection point they're talking about?
Yes. This is where we connect the dots to the bigger picture and definitely introduce a bit of nuance. Based purely on these Q2 numbers, their calculated return on equity is exceptionally high, like around 131%.
Wow, 131%.
I know, it sounds incredible. But, and this is a big but, it's crucial to understand the context here. This isn't a sustainable annualized performance that you'd expect to see year after year. Not at all. Instead, it's really a reflection of that dramatic rebound, that inflection point after previous losses. Think about it. When a company moves from a loss to even a modest profit, but on a relatively small equity base, the ROE calculation can look astronomically high.
Right, the denominator is small.
Exactly. Typical sector ROEs for established, profitable companies are much lower, usually, in the 10-20% range. So for investors, the real insight here isn't the 131% itself, but recognizing why it's so high. It stems from that low base after losses. The challenge, and where the true test lies, is in sustaining any positive ROE going forward as their base hopefully grows. Proving these operational improvements aren't just a one-off flash in the pan.
That makes perfect sense. It's a powerful rebound
Yeah.
rather than a steady state we can easily project forward. Needs context. So looking at everything we discussed, the good numbers, the business, the ROE nuance, what are the key strengths you've identified in Cemtrex right now? And conversely, what are some of the red flags or areas of concern that prudent investors should really be watching?
Okay, let's break that down. On the strength side, clearly we have that robust revenue growth and, crucially, a solid return to profitability. That's number one. The significant improvement in their gross margins, that 40% to 45% jump, is also a very positive sign. Points towards operational efficiency gains, and their successful execution on large government contracts demonstrates their capability in securing and delivering on substantial projects. That builds credibility. Also, their stated strategic focus on accretive acquisitions is potentially a strength. And just quickly, accretive basically means they're looking for businesses that, once acquired, will immediately add to Cemtrex's earnings per share rather than dragging them down or diluting them. It's a smart way to try and grow the bottom line through deals.
Right, accretive is key there.
It is. However, there are certainly red flags, too. We have to be balanced. First, their equity base of $6.4 million is still relatively small, and their cash reserves are limited at $4.5 million. That doesn't leave a huge cushion.
Constrains flexibility, perhaps.
Exactly. It could constrain their flexibility during unexpected market downturns or if major projects face costly delays. There's also, based on the immediate information, a lack of really detailed debt disclosure. So we don't have a full picture of their liabilities and leverage. That's something to watch. Furthermore, a potential reliance on these lumpy government orders, big contracts coming in sporadically introduces revenue volatility.
Right, feast or famine.
Kind of. It can make their revenue stream less predictable quarter to quarter. And of course, there's always execution risk associated with future mergers and acquisitions. No matter how accretive they're supposed to be on paper, integration is hard.
You mentioned acquisitions as both a strength if accretive and a risk, which is often the case with ambitious growth strategies like this. What exactly is their plan here? How aggressive are they planning to be, and how do they intend to fund these new ventures?
They've been pretty clear about their intentions. Cemtrex has announced plans to accelerate growth through targeted acquisitions, specifically focusing on cash-generating businesses. Their aim is quite ambitious. They're looking to add an estimated $3 to $4 million annually in operating income through these deals.
So a significant boost if they pull it off.
Potentially, yes. They've stated they plan to finance these acquisitions through a combination of internal capital, whatever cash they generate, and other funding sources. Which brings us to
The capital side.
right. Cemtrex also announced a public offering back in May involving common stock and something called pre-funded warrants. From an investor's perspective, why is that such a critical move at this specific juncture, especially with these big acquisition plans? And maybe you could quickly clarify what pre-funded warrants are. Not everyone might be familiar with that term. Certainly. That public offering is a critical piece of the puzzle right now. It directly addresses their need for capital, both to fuel that acquisition strategy we just talked about, and just generally to improve their financial flexibility. The proceeds are earmarked for, well, the usual things. General corporate purposes, potentially paying down some debt, and increasing working capital. Now, regarding pre-funded warrants, think of them like an IOU for future stock, but you're essentially prepaying most of the cost up front.
Okay.
Investors pay a set price today, which is almost the full market price of the stock, for the right to receive shares later by paying a very tiny, almost nominal exercise price, like a penny per share.
You lock it in.
Pretty much. It's a way for a company to raise capital now, but technically it delays the issuance of the actual shares slightly. It can sometimes be seen as managing the immediate dilution impact compared to just issuing common stock directly, though dilution is still a factor. And while this offering provides necessary capital, it absolutely raises important questions about potential dilution for existing shareholders. We've seen this concern echoed in discussions among retail investors online, on social media platforms. It's the classic trade-off. You get capital for growth, but it might mean each existing share represents a smaller piece of the pie, at least initially.
Right. The dilution concern is always there with offerings. So how is the broader market reacting to this whole turnaround story? You've got the improved operations, but also the acquisition ambition in this recent offering. Is sentiment generally positive, or is there still quite a bit of caution out there?
Well, the market sentiment, I'd say, while leaning positive given the strong operational improvements, definitely still has a layer of caution, especially when you factor in the broader economic environment. The Fear and Greed Index, for instance, last I checked was around 39, which generally indicates fear in the market. That suggests investors might be hesitant about taking on riskier assets, like small caps potentially are. While management commentary for Cemtrex is understandably optimistic, they're highlighting the turnaround actual analyst coverage is quite limited. That's pretty typical for companies of Cemtrex's size, their small cap status. They just don't attract the same level of research attention as larger firms.
Fly under the radar a bit.
Exactly. On social media, though, discussions are definitely picking up. You see some investors getting quite excited about this inflection point and the potential upside, but you also see others expressing caution, specifically mentioning the potential for dilution from the equity offering and just the inherent risks of investing in smaller companies. So it's mixed.
That makes sense. And it's always important to consider the size of the company when we look at growth numbers. How does Cemtrex stack up against the real giants in their space, like a Johnson Controls or a Honeywell, particularly when we talk about those percentage growth rates?
Right. Context is key. Cemtrex operates at a significantly smaller scale compared to those industry titans, Johnson Controls or Honeywell. Those are huge, established multinational corporations. They move more like super tankers in the market. Johnson Controls typically shows growth more in the low double digits, maybe. Honeywell often in the mid-single digits.
That's steady but not explosive.
Exactly. What's fascinating here, and why it catches the eye, is that Cemtrex, despite its much smaller size, has recently outpaced these larger competitors purely in percentage growth terms, with that impressive 59% year-over-year surge we mentioned. Now, this isn't necessarily because they're suddenly taking massive market share directly from the giants across the board. It's largely due to their lower starting base, which makes high percentage growth easier to achieve, and perhaps their agility in capitalizing rapidly on specific niche opportunities, especially within things like government contracts and those AI-enhanced security solutions where maybe larger players are slower to adapt or have different strategic priorities.
So nimbleness and a low base effect.
Essentially, yes. It highlights the potential for rapid expansion when you're starting from a smaller foundation, but doesn't mean they're suddenly the same size or have the same market power.
Understood. Okay, looking ahead then. What are the big opportunities Cemtrex could potentially capitalize on to keep this momentum going? And conversely, what are the most critical risks that you think listeners should be watching out for as this story continues to unfold?
Okay, opportunities first. Securing additional large government contracts, particularly for their Vicon Industries security technology, seems like a major potential catalyst. That's been a driver, so more of that would be good. Expansion into new verticals, perhaps leveraging their AI capabilities into related areas, is also a significant growth avenue they could pursue. And of course, the successful execution and, crucially, the integration of their planned acquisitions could materially boost recurring cash flow, especially given their stated focus on finding cash-generating targets. If they find the right deals and integrate them smoothly without overpaying, it could be genuinely transformative for a company their size.
And the risks.
On the risk side, the challenges are equally significant, I'd say. Integration problems with those acquisitions, or simply overpaying for them in the first place, could easily erode any anticipated gains. That turns a potential strength into a real financial burden.
Happens all the time.
It does. There's also the potential for that revenue volatility we discussed if those large contract wins, particularly from government sources, don't recur with some consistency. That lumpiness is a risk. And as we touched on, their limited cash reserves still constrain their flexibility during economic downturns, or if unforeseen operational issues pop up, they don't have a huge safety net. Finally, you can't ignore the broader macroeconomic picture. Uncertainty, things like continued higher interest rates, could increase their financing costs for any future debt they might take on for acquisitions or operations. That poses another risk to their growth plans.
So quite a bit to weigh there, opportunities against risks. If we try to connect all this to the bigger picture, then considering the momentum, the financials we've discussed, the strategy, and those risks, where does Cemtrex stand for an investor right now, say, as of July 2025? What's the bottom line?
Okay, putting it all together. Based on its current financial momentum, that robust revenue growth, the clear return to profitability, those improved margins, and a balance sheet that is showing some improvement, I'd say Cemtrex probably merits a hold rating for most investors right now. There's certainly speculative upside potential here, no doubt, but it feels heavily contingent upon them successfully integrating those acquisitions they're planning and continuing to secure those large, impactful contracts. A lot has to keep going right.
So hold for now. Watch closely. This brings up a crucial consideration for listeners, doesn't it? If you're a more prudent, maybe cautious investor, you'll really want to monitor the upcoming quarters very closely. Look for sustained performance, continued margin strength, further strengthening of their balance sheet before you'd even consider an upgrade from that hold.
Definitely. Need to see proof it's sustainable.
But on the other hand, if you are specifically seeking high-growth opportunities within the microcap tech and services space, and, importantly, you can tolerate above-average volatility because small caps are volatile, then maybe considering a multiple exposure while watching that acquisition progress very carefully, that might be a path for you. Manage the risk.
Right. It depends heavily on individual risk tolerance and investment goals.
Cemtrex's story is certainly a compelling example of a company navigating some significant challenges and finding a path to a potential turnaround. It's quite the shift. So, maybe a final thought for our listeners. What stands out to you as the biggest lesson from the recent journey? And how might that inform your approach when you're evaluating other smaller companies that have these big growth ambitions? That's something for you to consider as you continue your own investing research.